Hello again and welcome to my channel, Jokes on You. I'll be your host, Nick, and on this channel you get to follow me through my journey to financial freedom. Before I get started, I'd like to say, first and foremost, I'm not a financial advisor. I'm just a guy who likes to do research and bring it over to you guys, okay? So I suggest that if you are interested in whatever stock I'm talking about, you do your own due diligence as well. So, stock I'm going to be talking about tonight is Golden Nugget Online Gambling, which is ticker symbol GNOG. This is the online casino that's separated from brick and mortar Golden Nugget casinos that you may know of. Both entities are owned by none other than the Houston billionaire Tillman Fertitta. Okay, so for those of you who don't know who he is the sole owner and CEO of the Fertitta Entertainment Incorporated, which owns the restaurant giant Landry's Incorporated. Okay, now Landry's is not just one restaurant; it actually has other subsidiaries, which is Landry's Seafood House and the Bubblegum Shrimp Company. If you're a New Yorker like myself, I'm from Queens. You know that there's a Bubblegum Shrimp Company right there on Times Square. So you know, those are names, big names that people know. Other things that Tillman Fertitta owns are the NBA team Houston Rockets, and as well as the Golden Nugget Hotel and Casinos that we all know and love. Okay, and Gnog uh, made its debut as a publicly traded entity on Wednesday, December 30th of last year, which is when it launched on Nasdaq. Okay, this was after investors had voted on the merger with then SPAC company LCA, or Lancadia Holdings. For those that are not sure what LCA was, with all the hype around that merger, the price of LCA had skyrocketed up to $26.14 per share. Uh, that was that was what the hype, because it was leading to the confirmation. Everybody knew it was happening, and that confirmation was December 28th of last year. Since the merger, the price has fallen a bit. It's down to 1854, which is not really. It was not unexpected. What was unexpected was it to dip that much, which I'm not really too worried about. People wanted to take their gains and go, and it's not for me to decide what people are going to do with their money. Um, that's up to them. They got their gains. Everybody has their own way of trading, so it's no hair off my back. Personally, anything that is under $20 a share for this specific stock, I believe is a buy to me, because there's nothing but upside to this stock. At least from what I see. So at the end of 2020, Gnog had a yearly revenue of $319 million. Okay? And that was only from one state. One state in the United States of America, one, New Jersey, 319 million. So to look forward, 2 weeks ago, 2.5 weeks ago, Gnog moved into a recently legalized state of Michigan. It also last month started doing iGaming in Pennsylvania. So that's 3 states now. Two in the last month that have joined, that Gnog has joined. So I see nothing but great. This is a major reason to invest now, especially at this price, because the access to states beyond New Jersey, Pennsylvania, and Michigan are tremendous. Before the merger even happened, LCA, Lancadia Holdings, promoted the merger as an opportunity to expand into other states as well. Other states that recently signed licensing deals to join with Gnog are Illinois and West Virginia, which is now giving Gnog 5 states, 5 states to make money in this year. So they're looking to expand in other states as well, like Nevada, Louisiana, Mississippi as well. That would be a whopping total of 8 states if that happens this year. Okay, but like I'm saying, this is quick expansion. If you don't see that, I don't know what you're looking at. And to be honest, with all the pandemic that's going on, online gambling is ramping up. It's absolutely insane. Okay, because let's be honest, people don't right now, because of the coronavirus, don't want to go out to a crowded casino. So to be able to just walk into your living room, jump on a laptop or on your mobile phone, and just play. If you want to play in your underwear or your robe, you can play right in your house. It's fine. So this is going to be something that's really going to be a big thing in the next couple of years. So I think it's a great idea. Uh, like I said, states are going to begin legalizing one after another as they start seeing these states getting their tax revenues. All right. So I think that with the tax money incentives, more and more states over the years are going to vote to legalize online gambling. Now a lot of people like to bring up, oh, Gnog, but there's DraftKings. They're so big. Yes, you're right. DraftKings is one of the top online entities out there right now. If you look at their stock price is $64.38. They're literally the top gambling entity out there. But what Tillman Fertitta is doing and Golden Nugget is actually positioning itself to knock, to just get rid of him, put him down a notch. They're trying to get out of, they're trying to get into that top spot, and they're trying to knock DraftKings out of it. Okay, and let me tell you why. Gnog owner stated in a press release last year that the online gambling sector or iGaming is so much more profitable and bigger than sports gambling market. And GNOG is iGaming, people. Online casinos give the guest a variety of different gaming experiences, okay? You got the slot machines, you got the poker, you got roulette, you got all these good things that people are interested in. And just to give you a little bit quick little touch up on the estimates for 2021. Okay, so the estimated revenue for 2021 for DraftKings is $733 million. And that's not something to scoff at. Okay, Gnog has an estimated revenue coming up of $122 million. All right, now that sounds a lot less than DraftKings, but let me bring this extra info to you. Okay, DraftKings is great. But if you look at the cash flow that it has available, it's in the negative, DraftKings. Gnog, on the other hand, is in the positive. They have no debt. They're working towards expanding because they have the money to do so. And if you look at the net average revenue per customer for DraftKings, the average customer spends about $39 betting at DraftKings. Compared to Gnog, the stats for that, it's each customer, the net average revenue is 566. 566. That is amazing compared to the $39. Okay? And that's because Gnog has their branding. Their branding, they've been around for so long. Golden Nugget Online Gambling. Golden Nugget. It's branded. Everybody knows that. It's a household name. And, just the fact that Gnog is just starting and they are already cash flow positive, that's exciting as hell to me. So, don't get me wrong, DraftKings will still go up because, they will eventually be cash flow positive. They are a good business. I personally jumped onto the opportunity to buy Gnog because it's a great long-term investment, that will continually give me gains over time. The longer you have it, the more opportunity you have to make gains with this, okay? So, everybody, that's it for today. But again, do your own due diligence. I'm not a professional. This is for entertainment only. If you enjoyed this video and the information I brought you and to the table, please like, subscribe. And if you are new and you're subscribing, hit that notification bell so you can get notified when I drop a new video. Also, if you're new completely to trading and you don't have any platforms to trade on, check the links down below. I have two of them, one for Robinhood. You join Robinhood, you get one free stock. And when you make your first deposit, if you click on the Webull link, you get 2 free stocks once you join and your first deposit clears. Okay, so everybody, thanks for watching. And don't forget, if I bring it to you and you don't jump in because you didn't do your own due diligence, when you miss out on those gains, joke's on you, guys. Thanks a lot for watching the video. We appreciate you all. We're out of here from Queens, baby. Have a great night.